Pankaj Mital, Chief Operating Officer, and Kunal Malani, CFO with SAMIL, they both join us. Good morning, gentlemen. Thank you for joining us. Kunal, so on quarter-on-quarter basis, your EBITDA margins have expanded. Is it largely because of the lower energy costs, or were you able to take on a price hike? Can we expect similar kind of a margin run rate for FY24, or is there some more room for expansion?
Right. So first of all, we are very pleased with the results. The results are done at a time when inflation is at an all-time high. So against that backdrop, we have still been able to deliver it, and that's a lot thanks to our customers, who's supported us, where we have shared some of the pain of these inflationary costs. Our teams have also worked very hard in order to improve many of our operations. There were red units, which we are working hard to turn them more and more profitable. And at the same time, from our location and product mix perspective, we've been favorably positioned. Both Europe and North America has grown this quarter. And with our product mix being more tuned towards EVs, a lot of content has also flowed in. So, a lot of hard work with industry tailwinds have helped us deliver these results together with customer support.
Kunal, order wins of about 2.8 billion euros in the second half. That, I guess, is lower to what you've clocked in the first half. Is the demand environment improving globally?
First of all, I think you're referring to SMRP BV order book, possibly. From SAMIL's perspective, this is the first time we have released our book business, which is at an aggregate level, nearly 5.7 lakh crores or $70 billion. That, if you think about, will get executed over the next 5 to 6 years, gives you a good spread of how our growth is at least expected from the current order book. Also, needless to say, there's a lot of pressure across the industry still. And that means some of the more, people who have better balance sheet strength tend to get the disproportionate share of orders. And that's what we have seen actually in the last few quarters, and we expect to see that going forward as well. So in our view, we are very well positioned for growth going forward.
Pankaj, on your European operations, from a revenue run rate perspective, are we closer to the normalized run rate, or are there still supply chain pressures?
See, we see our customers doing better, but if we look at it from the pre-COVID times, still the volumes are lower than the pre-COVID time. However, the improvement is continuing.
Kunal, 1,000 crore quarter-on-quarter debt reduction, lowest debt and leverage in last 7 quarters. How much further can we expect to go down on this?
Right. So I think, as we have mentioned, our organic business continues to move from strength to strength. In fact, we were expecting, frankly, a lot more deleveraging to happen with more reduction in working capital. However, that remains work in progress. But that also means that going ahead, we should be able to further delever our business. That is as regards the organic side. Going forward, we would also be, there are announced M&As that have been done or acquisitions that have already been announced. These will require some amount of debt to also come in. So at an aggregate level, after the announced acquisitions, we should still be sub 2 times debt to EBITDA.
Right.
Kunal, the SS acquisition is on track to complete by Q2. Any delays or any other timeline completions which could delay this entire integration process?
The acquisition, right now at least it seems we should be there by Q2. The integration is an ongoing process. It's a large asset. Will take some time to integrate, and we've created our own integration teams and working towards it right now. Time frame unknown. Once we get it is how we will come to know, and we'll spend more time around it.
Right. Kunal, your strategic acquisitions in FY23. Any more acquisitions that you may have lined up for this fiscal? And EV being a forefront, are you looking to acquire companies that have more share of EV in their books?
The direction is not EVs for sure. Having said so, I think acquisition is a bread and butter part of Motherson. There is a large pipeline of M&A targets that we continuously look at. And in an environment which is as foggy as what it is, the reality is the customers are also looking at stronger houses to house some of the more painful assets for them, where we stand to be looked at positively given our own balance sheet strength. So yes, M&A will be a regular feature, hopefully in the ensuing year as well.
And Pankaj, 20% of the order book is from EV. So how do you see this pie increasing in FY24?
It will all depend on the makers. So we, as a OEM supplier, the car makers, as you see them in the market, the demand for EVs has been there, and slowly and steadily they're gaining ground. So it'll take time before there is a very big percentage of EV cars in the market. But having said so, we have very good order book from the EVs, which shows that all the technologies which are required by the new gen cars, they're all there with us. And we are working hand in hand with them, both with the established players as well as the new gen players.
Kunal, so far FY23 broadly your revenue was around $10 billion. Your 2025 target stands at $36 billion, which is 4x in the next 2.5 years. How confident are you achieving that target?
So, look, I think the 9.5 billion is what is there today, and then there are announced transactions. The announced transactions are actually adding nearly 5 billion on a gross basis to the top line. In addition, we've given you the order book of 70 odd billion for 5 to 6 years, which should further, expand the 9.5 going forward. So, give or take, we are nearly halfway there. And as I said, there's a large pipeline of M&As that are still there, which we'll see how it plays out. But yes, I think we are fairly confident that doing the 36 is the easy piece. The 40% ROC is frankly the more difficult piece, but we'll work hard towards it.
Right. Kunal, Sumitomo Wiring did reduce its stake in Samvardhana Motherson, right, to about 14.3 in the fourth quarter. Can there be more overhang from investors' point of view of a further stake sale, or they plan to stay committed?
I'd mentioned this earlier as well. I think these are conversations which are best done with the shareholder. From a company perspective, Sumitomo remains a strong partner. Nothing has changed at the partnership level or their involvement in the business. They remain on the board of SAMIL as well. So from our perspective, it is status quo. Rest, I think it's their shareholding, so it's best asked to them.
All right, gentlemen, thank you so much for taking time out and joining in and giving us a view on how business is shaping up as well as the outlook on Samvardhana Motherson.